While you were watching the stock market charts this week, the real decision was made behind closed doors in Basel, Switzerland. This isn't a rumor. It isn't a conspiracy theory. It is a signed regulatory mandate that goes into full effect the second markets open on Monday morning. They passed it quietly. They didn't want to panic, but they did it because they know the financial plumbing is about to change forever. If you have money in a bank, you are involved in this. The group behind this is called the BIS, the Bank for International Settlements. Think of them as the central bank for central banks. They are the boss of the Federal Reserve, and they just pulled the trigger on the final phase of a rule set called Basel III. This changes everything. Here is the simple version. For 40 years, big banks have played a game of make-believe. They treated paper contracts for gold and silver as if they were the real thing. They would sell you a receipt for gold, but they didn't actually have the gold bar in the vault. They were selling promises. It was a lie. But starting Monday, that lie stops working. To understand why this ruins the game for the banks, you have to look at how they count their money. Before today, a bank could hold these paper promises, what we call unallocated gold, and tell the regulators it was a safe asset. It cost them almost nothing to hold these positions. This allowed them to manipulate the price, selling billions of dollars in silver they didn't own to keep the price down. But the new rule changes a specific metric called the net stable funding ratio. I know that sounds boring, but stick with me because this is where your money is at risk. This new ratio makes holding paper money expensive, extremely expensive. It penalizes the banks for holding short positions. It forces them to make a choice. Either buy the real heavy physical metal to back up their bets or get out of the market entirely. They passed this rule to stop another 2008 crash. But by doing that, they lit a fuse. JP Morgan and Citi can no longer hold billions in short positions without putting up massive amounts of real capital. The cost to manipulate the price just skyrocketed. It used to be free to suppress silver. Now it costs a fortune. We are already seeing the effects. Banks are quietly unwinding their positions in the overnight markets. They are desperate to comply before the Monday deadline. This buying pressure is building up. It isn't speculation driving the price. It is the banks trying to save themselves from the regulators. But here is the twist. This is the part the news won't tell you. The most bullish part of this rule is that it reclassifies gold. Yesterday, regulators viewed gold as a risky asset, kind of like a volatile stock. Starting Monday, gold is a Tier 1 asset. That means it is now considered risk-free capital, the same as holding physical cash or US treasuries. Think about what that does to a banker's brain. Previously, they wanted to sell gold to suppress it. Now the rules incentivize them to buy to strengthen their balance sheet. They are moving from suppressing the price to hoarding the asset. When the biggest sellers in the world suddenly become the biggest buyers, the price floor doesn't just rise, it cements itself. This explains the weird behavior we saw last week. Remember the liquidity vacuum? The market stopped moving. It wasn't a computer glitch, it was the market makers stepping back. They pulled their sell orders because they knew this rule was coming. They didn't want to be caught on the wrong side of the trade when the new laws kicked in. They were recalibrating their algorithms for a new reality where physical metal is king. And the banks aren't the only ones watching. Industrial giants like Tesla and Samsung aren't stupid. They read the same reports. They know that if the banks stop selling paper silver, the price is going to explode to meet the real physical demand. We are seeing panic buying in the industrial sector right now. It is a race. You have the factories on one side trying to lock in supplies for their electronics and cars. On the other side, you have the banks trying to suck up physical inventory to meet their new capital requirements. There is not enough silver for both of them. The West is finally admitting defeat. China has been doing this for months. The Shanghai Gold Exchange only trades fully allocated physical metal. They don't play the paper games. By passing this rule, Western regulators are admitting the Chinese model won. They are admitting that paper derivatives are dangerous and physical metal is the only true safety. So why does this matter to you? Because this makes the banking system safer, sure, but it crushes the currency. To buy the gold and silver they need, banks have to sell something else. They will sell dollars, they will sell treasuries. This puts massive downward pressure on the dollar. It is a seesaw. As gold and silver revalue higher to become Tier 1 assets, the purchasing power of the dollar holding them up must fall. The revaluation of gold is the devaluation of your savings. And there is a specific danger. If you hold metals with a bank, if you have an unallocated silver account, you are in the crosshairs. The bank is now incentivized to close your account. Holding your unallocated silver is now a liability for them. Don't be surprised if you get a letter next week saying, We are discontinuing our precious metals program. Here's a check for the cash value. They don't want to hold the metal for you. They need it for themselves. You won't hear about the net stable funding ratio on the nightly news. It's too technical, it's not flashy, but this is the plumbing of the entire financial world. The media will scream about volatility, but they won't tell you why it's happening. The root cause is simple. The era of paper leverage is over. The era of physical assets has begun. Last night, the era of infinite leverage ended. This is historic. This is just as significant as 1971. That was the year President Nixon closed the gold window. In 1971, the government moved us away from metal. Now, over 50 years later, Basel III is moving us back to metal. It is a U-turn. It is a slow, boring, bureaucratic return to a gold standard. They just aren't calling it a gold standard. They are disguising it as banking regulation. The central bankers aren't stupid. They know the debt is unsustainable. They know the system is shaking. So they are preparing the lifeboats. And those lifeboats are made of gold and silver. Because the banks are stepping back from manipulation due to these new costs, we are finally going to see true price discovery. What does that mean? It means the real price. In the short term, expect chaos. We might see extreme volatility as the paper shorts scramble to cover their bets, but the long-term trend is locked in. The price must rise. It has to reach a level where the physical supply meets the physical demand without all the paper receipts diluting the value. That price is significantly higher than $85. But there is a catch. This rule change hits your wallet in a way you might not expect. Because banks have to hold more real capital, they will have less money to lend. This rule change triggers a credit crunch. Starting Monday, it becomes harder to get a mortgage. It becomes harder to get a business loan. The money spigot is turning off. This creates deflationary pressure. The economy slows down, but the Federal Reserve won't let it crash. They will meet this slowdown with inflationary printing. Slowing economy plus money printing equals stagflation. In a stagflation environment, you don't want stocks. You don't want bonds. You want silver. It is the best performing asset class in history for this specific economic weather. The smart move is to copy the banks. If the banks are forced to hold physical metal, you should hold physical metal. If the banks are exiting paper contracts, you should exit paper contracts. Do not bet against the house. The wind is blowing toward tangible assets. They passed the law. The rules have changed. Monday morning is the start of a new era. The banks are scrambling to comply. The shorts are covering. The physical market is tightening. This isn't a conspiracy theory. It is a regulatory reset. The paper game is over. The physical game has begun. But there is a trap here, a doom loop that the banks accidentally created for themselves. It's a specific scenario where complying with the law actually bankrupts the bank. I'll explain how that mechanic works in a minute and why it forces the Fed to print trillions. But first, you need to understand the London loophole that just got deleted. For years, the London Bullion Market Association, the LBMA, operated with a cheat code. They had a loophole that allowed unallocated gold to be counted as a high-quality asset. This was a magic trick. It allowed banks to lease the same bar of gold multiple times. It was a paper pyramid scheme. Basel III deletes this cheat code. It demands that for an asset to be Tier 1, it must be allocated. It must be physically present in the vault. No IUS. This forces the London banks to scramble for physical inventory. The days of fractional reserve gold banking are ending. When London demands physical delivery to meet these new ratios, the drain on global vaults will accelerate to a pace we have never seen. The entire $100 trillion derivatives market rests on the stability of this collateral. By forcing banks to hold better collateral, gold and silver, Basel III makes trading derivatives expensive. We expect to see a massive deleveraging event. Hedge funds that use cheap leverage to short silver are in trouble. The banks will no longer lend to them at low rates. They will be forced to close their positions. This short squeeze will be driven by the mechanics of the banking system, not just by market sentiment. The whales already know this. Sovereign wealth funds in the Middle East and Asia have been preparing for this rule change. They knew that once gold became a Tier 1 asset, its value would have to rise to support the global balance sheet. They have been front-running this regulation for 2 years. Now that the rule is live, expect them to make it public. When a fund with $1 trillion under management moves just 1% into silver, the market explodes. And while Basel III focuses on gold, silver wins by association. Historically, they are siblings. They move together. As gold reclaims its status as the ultimate money for central banks, silver reclaims its status as the ultimate money for the people. The ratio between them will shrink. Investors will realize silver is just the undervalued sibling of the new Tier 1 asset. We are witnessing the stealth remonetization of the entire precious metals complex. Now, back to that doom loop I mentioned. Ironically, these rules were designed to make banks safer, but in the short term they make them incredibly vulnerable. Many banks simply do not have enough physical metal to meet the requirements. To get it, they have to buy it on the open market, but their buying drives the price up. And since they still hold short positions, a rising price hurts their balance sheet. They are trapped. To follow the law, they have to destroy their own positions. This creates a loop where complying with the law pushes the bank toward insolvency. The Fed will likely have to print money to help it buy the gold. This is inflationary. It also reveals a conflict, a split in the establishment. You have Basel III pushing for hard money like gold, but you have other elites pushing for CBDCs, digital money. The commercial banks want gold to survive. The central banks want to control CBDCs. In this war between the banking factions, the individual investor, that's you, can actually win. You win by holding the one asset that both sides are desperate for, physical metal. With these new rules, the auditors are coming. Regulators are going to be cracking open the vaults to make sure the metal is actually there. We suspect that for years banks have been counting leased metal as their own. It's like renting a car and telling the bank you own it. It's fraud. When the auditors arrive this quarter, the double counting scam gets exposed. A bank that cannot prove it has the metal will either be shut down or bailed out. The demand for audit proof, real physical bars, is about to skyrocket. And don't forget the miners. This rule change incentivizes miners to stop selling to the public. They will sell directly to the banks. If JP Morgan needs 50 million ounces to meet their new Basel III requirements, they aren't going to buy it on the open market. They will call the mine and buy the entire year's production. This cuts out the middleman. It leaves zero supply for Apple, zero supply for Tesla, and zero supply for your local coin shop. The squeeze on the regular guy is going to get tight. The banks are going to hoard the supply to save themselves. The rule technically starts Monday. The full implementation will take a few years, but the market is a time machine. It prices in the future reality today. The smart money isn't waiting for the final deadline in 2026. They are positioning now. By the time the full impact hits the headlines in 2026, the price of silver will likely already be in triple digits. They passed it. The era of paper manipulation is ending. Not because the banks wanted it to end, but because the regulators forced their hand. Basel is the catalyst that forces the system to be honest. And honest money means much higher prices for gold and silver. The banks are buying. The nations are buying. The question is, are you? History rhymes. In 1933, the government confiscated gold to revalue it. In 1971, they abandoned gold to print unlimited money. In 2026, with Basel III, they are remonetizing gold to save the system. Every time the rules change, there is a massive transfer of wealth. The people who held paper assets lost everything. The people who held physical metal kept their power. This rule change is the signal that the cycle is turning again. The system is admitting that fiat currency has failed. They are retreating to the safety of hard assets. Why are they doing this now? Because inflation is sticky. The central banks know they cannot get inflation back to 2% without crashing the entire economy. So they are changing the definition of safe by making gold and silver Tier 1 assets. They are creating a new anchor for the financial system that can survive a decade of high prices. If the banks are hedging against inflation with metal, you should be doing the same thing. For 40 years, US Treasury bonds were the ultimate haven. Basel challenges this. By elevating gold to the same status as bonds, the regulators are admitting that bonds are no longer the only risk-free asset. This triggers a massive shift. Capital will rotate out of the bond market and into the metals market. We are talking about trillions of dollars. If just 1% of the bond market moves into silver, the price of silver doubles overnight. You have heard people whisper about the global reset. This is it. It isn't a single explosion. It is a series of boring rule changes. Basel is a key pillar of the reset. It reestablishes gold as the center of the financial solar system. It moves us away from a US-centric dollar system to a neutral asset-backed system. This levels the playing field for countries like China and Russia, which hold massive metal reserves. The West is conceding economic ground to the East through regulation. The document is signed. The rule is active. The banks are moving. The window to get in before the institutions is closing fast. Once the full weight of the banking sector enters the physical market, you will be priced out. Do not wait for the news to tell you what to do. The news is written by the people who want to buy your silver cheaply. Look at the rules they passed. They pass them for a reason. Follow the money, not the rhetoric. Buy what the banks are buying, not what they are selling. But Basel III is just a shield the banks are using to protect themselves. You also need to know about the sword they are building to attack your privacy. While they secure their gold, they are preparing a new digital trap for your checking account that bypasses the banking system entirely. It's called Project Icebreaker, and the details are terrifying. Click here to see how this new digital currency system is designed to lock you in and how you can opt out before it goes.